Hello, everybody, and welcome. I am Dr. Richard Smith. I am the Chairman and Executive Director of the Foundation for the Study of Cycles, and it is great to be here with you today. Great to be a part of this historic organization, and great to be a part of such a wonderful group of people who's helping to bring the FSC back to life and restore it to its former glory. So thank you all for joining us. And I today am going to take a look back on our Financial Cycle Summit that we did a few months ago. That was a wonderful event. It's still available on YouTube, at least 10, 12 hours of great content there. If anybody wants to go back and enjoy more of that on our YouTube channel. And then after that, I'll go over a little bit of my own views about what's happening in the markets right now and what's likely to happen. And then I'm going to wrap up by updating everybody on some of the progress behind the scenes, the hard work that's going on. You've seen some of the fruits of that work already, but just give ourselves a shout out a little bit over some of the great progress that we've made in the last few months. So welcome. And let's go ahead and get started. So going to jump in right away here and just revisit the slides that I shared back in my summary presentation of the Financial Cycles Summit week. And so of course we are the Foundation for the Study of Cycles. We were just launching our new website and launching our new logo back then in June. And so that was nice to see. Whoops, let me just get back here. All right, wrong screen. And we also shared our mission to discover and record cyclical phenomenon in all the arts and sciences and to promote the application of valid cycles to the progress of humankind. That is still our mission today, and nobody has wavered in our commitment to that broader mission. And in fact, one of the wonderful events that's happened since we were last together at the Financial Cycle Summit is that the Foundation for the Study of Cycles has merged with the Cycles Research Institute led by Ray Tomes in New Zealand. So we are delighted to now have Ray Tomes on the board of the Foundation for the Study of Cycles, and to really be the person who leads our efforts to go deeper into the sciences and cycles in other areas besides financial markets. So very happy to be able to bring Ray onto the team and to have him on the team. Ray Tomes is one of the shining lights in the world of cycles research, and it's an honor to have him. So our mission continues. Of course, we always remember the founder of the foundation, Edward Dewey, his book, The Cycles, the Mysterious Forces That Trigger Events. We've actually been looking into whether or not we can republish this book soon and get it back into circulation. So very excited about that. And just a reminder from Einstein, the most beautiful thing we can experience is the mysterious. It's the source of all true art and science. And the cycles, look, I'll just go back here to looking at you all. So cycles still are a mystery. We don't know what causes cycles. We're in the process of discovering cycles in our world, and when we see cycle synchronies, etc. So we're early on in our renewed commitment to a science of cycles, and we're here to solve a mystery. And there's no doubt that it is a mystery, and that's a wonderful thing. And by pursuing mysteries, we oftentimes make discoveries that no one was expecting, and hopefully that will be us. So, all right, moving on to some of the forecasts from back in the Financial Cycle Summit. So these were from Sherman McClellan. Thank you, Sherman, if you're listening. And this was a cycles forecast made as of April, end of April, with some highlights. Top around now. That was yesterday. That would be great if that was a top. And then, a dip into mid-December, and Sherman was really focused on a top happening in the spring of 2021, kind of a final top for this bull market. And you see that in that cycle here. So if we look at, let's see what actually happened to prices. Let's see, May 27th, July 2nd, August 10th. We can go look at a few dates. Let's see. This was around May. Did have a bottom there. This was July. That's June. Let's see. Sherman's. Oops. September 9th and November 13th. September 9th was getting into here. Well, that's in the ballpark. And then we'll see if we are, what happens if this is a top or if we're powering into the next big bull run. But pretty good forecast for being done back in April. Definitely some correlations there. This was Sherman's and Tom McClellan's from McClellan Financial and the McClellan Report. Incredible service if anybody's interested in that. And this is the correlation between crude oil and the Dow Jones Industrial Average, where the crude oil is moved forward by 10 years. So this is forecasting a top around also the spring of 2021. So seeing that still in a lot of different models, and something to still be alert to and on the lookout for. This was Larry Williams, a 65-week cycle, one of his favorite cycles. And interestingly, 65 weeks is about 300 to 325 days, split difference, say 312 days. I was looking at my own cycles tool here. Where'd that go? Give me just a second. Too many screens. Where'd my cursor go? Oh, there it is. Okay. All right, so this is the S&P 500. This is a current cycles analysis on the S&P 500. This is an application that I developed over the years, and it's a desktop application that I still use today, and it's very similar to the Cycles Analyzer that we have available online to Foundation members. I just personally am more comfortable with my own interface and tools that I developed. So this is a cycles analysis on the S&P 500, and there is a prominent 312-day cycle in the S&P 500, which corresponds almost exactly to a 65-week cycle. So Larry was spot on to be taking note of a 65-week cycle. It is one of the prominent cycles, in the U.S. equity markets still to this day. So we'll get back to that a little bit later, but did want to validate Larry's work here. And as best I can tell, was this cycle is also topping in the spring of 2021. This was Larry's forecast for 2020. Bottom in July, pause in August, dip in October, rally in November, falling down, around the election down through December. So, and this was an election year, average of election years. And we've definitely seen the election year cycle play out, follow the script quite closely. It's been a remarkable year for the election year cycle. So definitely a forecast worth paying attention to there. Moving on, we heard from Jeffrey Hirsch of the Stock Traders Almanac, and of course, son of Yale Hirsch, one of the legends in the seasonals and cycles business. And we probably, election years, average gain about 6%. We're probably back there about now for the election year, and wouldn't be surprised to see the markets end up there, up 5-6% this year by the end of this election year. So seems like that model continues to hold. Jeff and the Stock Traders Almanac folks oftentimes have noted trouble in the year after an election, and 2021 is still the year in which many of the current cycles models are showing significant tops, and it also is the post-election year this year as well. And so another reason to cast a wary eye on 2021. So we saw bear markets start in 2001 and 2009, for example. We may well see a bear market start in 2021. Let's hope that we don't see a major war start in 2021, but we'll take a look back at the war cycles here shortly with Bill Cerubi. And it is a little, gives one pause to look at it. So this is just one example of many different seasonal charts that we saw throughout the Financial Cycles Summit. The green line here is the latest 30 years of data, and very consistently, we see a rally from October through early January. Certainly been in the black data is 70 years. So it's moved forward a little earlier, started a little earlier over the last 30 years, but still very prominent, and certainly seems like it's playing out again this year. We saw those lows a week or two ago, and many people expecting another dip before the end of November, but so far the market has not obliged. And anybody who was looking to get in at the lows, hopefully you were buying a week or two ago. So seasonal patterns still strong, still super reliable year after year. Seasonality is where I started my interest in the markets with Jake Bernstein 20 plus years ago. And still to this day, I marvel at how useful seasonality is. And seasonality is essentially a 1-year cycle. So definitely keep an eye on seasonality. This is also a seasonal model from the Stock Traders Almanac and the Hirsch family, showing this stunning result from 1950 to 2019, that if you had basically broken the market up into 2 seasons, May to October and November to April, and just tweaked it with a MACD timing indicator, you could have gotten all the gains that the market had to offer with only being in the market, a little more than half of the time. So half the risk and all the reward. And we saw the market rally this year between May and October. Was speaking with Bill Cerubi recently, who was sharing with me that when you see the market rally in the May to October timeframe, I think he was referencing Sentiment Trader and Jason Geffert, that I think 17 times out of the last 17 times, anyways, 100% of the time, as far back as there are records, the market rallied even more strongly in the November to April period. So a rally in May to October this year is a tailwind for additional bullishness, at least through the spring, early summer of 2021. So take some comfort in that. All right, then we heard from Peter Eliades and shared with us some wonderful techniques and a unique approach to the Hurst cycles. And he made this forecast back then of the S&P rallying to at least the 3,500 to 3,800 range. We are there now. We're smack dab in the middle of this range. And, you know, this was, again, back in June, when a lot of people were incredulous about whether or not the markets could continue rallying in the face of COVID and, you know, such a strong rally off the March lows. So kudos to Peter for saying, you know, quite emphatically that he expected the S&P to reach at least the 3,500 level, and, you know, somewhere in the 3,500 to 3,800 level. And indeed, we are there today. So that was an excellent forecast. All right. Then we heard from Bill Sarubi, and Bill really focused on the 10-year cycle, which is a cycle that not too many people have the patience to pay attention to in the markets. But I learned a lot about this cycle, and I have started to pay closer attention to it myself. I do think those of us who do have the patience to pay attention a little to longer time frames, this is definitely a cycle worth paying attention to. Years ending in 0, which is what we're in right now, typically have the worst returns. Years ending in 2 have a tendency to bring bear market lows. So if we do indeed see a top in the 2021 time frame, then we could well see a low in 2022 based on the 10-year cycle. So something to keep in mind. And a wonderfully simple little model here of these are seasonal cycles, basically taking a 10-year cycle, a 4-year cycle, and a 1-year cycle, just adding them together and getting this lovely little annual forecast here that predicted, you know, lows in October, rally into November, flat, little dip into December, and rally back in through December and January. So just wonderful chart. This was in 2016. This was the model for 2020. It's been playing out pretty well this year too. This was Bill's monthly cycle using monthly data on the S&P 500, forecasting you know, a low in June, rally into July, and then really rallying through July, August, September, October. And if you had followed this model, you definitely would have made money. So another great forecast. Moving on to the war cycles. This is a forecast that was made back in the 80s when the data ended. You can see the horizontal axis here. This is 2022 right here. So 2021, 2022, 2023. This original war cycle forecast has been forecasting more conflict. And this is one of the things that I would love to have the foundation update. Foundation board members, take note. Let's get the Wheeler war cycle back on track. But in the meantime, this cycle is still has some merit and gives us pause, I think, from 2020 to 2023 for more conflict arising. You know, it would be interesting. I don't think Wheeler was familiar with cyber warfare, but that's certainly a lot of the world where warfare takes place these days. So be interesting to update Wheeler's war cycles for the 21st century. And the panic cycle, it's another interesting one from Bill, peaking around September 2020. So I think it's interesting personally that while COVID isn't peaking, certainly people have sort of gotten tired of being in a panic and are trying to figure out how to get back to their routines and life. So I think it's interesting that the panic model made a forecasted a top in September 2020. And even though COVID is rising right now, the panic levels are not gripping the nation like they were throughout the summer. We heard from Perry Kaufman, made some seasonal forecasts that were similar to others, especially the Hirsch and the Stock Traders Almanac, so I haven't included them here. And this really isn't a cycles slide, but I just bring it back to our attention because I think it's so important. This is, this is sophisticated stuff, but this is from Perry Kaufman, and he's got a big book that he publishes. It's been updated like 6 or 8 times now, and it's the kinds of returns you can get if you target a certain level of volatility in your portfolio and make sure that the volatility stays at that level. So this is not stabilizing your portfolio at a 12% volatility level, but still being in the same stocks, making the same buys and sells, making a 1,600% return versus just targeting a certain level of volatility in your portfolio and rebalancing for that to keep that in the ballpark and making, 3 or 4 times the returns. So that is an area that I personally work in outside of my foundation role, and hopefully I'll be able to bring some more of that to foundation members in the coming months. Then we heard from Jake Bernstein, and this is the S&P 500. These are weekly bars. So this goes back to 2009 to about 2016. And one of the things that Jake was highlighting here was, I believe these are commercials with their commitment of traders data in the futures markets. And it's very rare to see the commercials be long the S&P 500. They're usually hedging their portfolios with the S&P 500. So when you see commercials long, that's a bullish thing. Was just speaking with Jake this past week, and he is seeing that same phenomenon over the past month, where commercials are once again long, and the S&P 500 in the futures markets, and that's another bullish signal for the markets for the next few months. This is just a shorter term chart on the S&P 500. I think that might be sentiment down below. I'm not quite sure, but that's all right. This is daily bars on the S&P 500. So what is this? I don't know what the cycle periodicity here is, but it looks like if we go from March 15th out to May 15th, so maybe that's about a 40-day trading cycle, 39, 40 days, one of the stronger shorter term cycles in the markets. And another seasonality picture similar to what we saw from Jeff Hirsch. This is the Dow 1920 to 2019, so 100 years of seasonal data. and still see that late October lows rally through November and December into early January, usually about the first or second week of January. So as a seasonal trade, June 27th to July 15th. Let's go take a look at it on some, oops, see what happened there. June 27th. Right there, either one of those 2 days. Pretty good bottom to July 15th. Right there. Another seasonal winner from Jake. June 27th to July 15th with his seasonaltrader.com. Very cool. And then, of course, we have the strongest seasonal trade of the year from around October 27th or so through January 6th. So great job, Jake. We saw a little bit, heard from Stan Ehrlich. Stan has been quite active in the markets. Anybody who wants to follow him, I think he's sharing his market activity on a daily basis. Make sure to get in touch with him. The main thing I wanted to bring to our attention from Stan that he shared with us back in June was this Santa cycle. Buy 1, 2, and 3 days before Christmas, buy 1/3 of your total position each day, hold the position until the first 3 days of January. So this is basically buying before and holding after the holidays and kind of spreading out your risk over 3 days on either side of the holiday break. And he showed us 2019 results. You know, buy 3 days, buy 3 days before Christmas and sell 1 day after the first day of January, so probably January 3rd. Buy 2 days before Christmas, sell the second day after the new year. Buy 1 day before Christmas, sell the third day after the new year. So if anybody wants to take a look at that, it's a great seasonal trade from Stan Ehrlich. All right. And Stan also highlighted a 52-day rhythm in the S&P 500. We'll take a look at that in a cycles analyzer today. So another interesting idea from Stan was this little period, which is 10% of the cycle length, 5%, I think one side, 5% on the other, which he called the WOO, or the window of opportunity. And I think that's a great concept because cycles oftentimes don't hit on the exact day. But paying attention to the WOO, W-O-O, window of opportunity, was a nice little piece of information from Stan about an approach to using cycles and, you know, giving them some wiggle room. All right, so the common threads that we heard from all the analysts, right? They're all successful with credibility and they all see value in cycles. And I think their faith in cycles has once again demonstrated its value with their forecasts since June and how they've played out. So these are some of the highlights. I think that they continue to be relevant today. And the theme 2020 will likely be okay. 2021 is scarier. That certainly seems to be playing out. And being able to stay long 2020 myself has been great. And to supplement that with a few cycle bottom forecasts has been one of the best years ever for me personally. So good stuff. All right. So moving on then to what's going on in the markets today. If there are any questions, let's see. How do we know how to set the width of the WU? So let me see if I can go back to Stan's slide here and try to see if we can tell if he's using 5% or 10%. He says 10%. I just don't know if it's 5%. Oops. Get to the right slide. So on a 52-day cycle, it looks like he's doing about 10 days. So 1, 2, 3, 4, 5. 1, 2, 3, 4, 5 either side. So it looks like about 10% of the cycle length either side of the cycle. So if you have a 300-day cycle, that would be 30 days either side of the cycle. And it's a good filter for saying, hey, you know, if we're going to be incorporating a cycles forecast into our into a system, right? Stan is definitely a systems trader. Then give that cycle, you know, some wiggle room, 10% on either side, 10% of the cycle length on either side of the cycle top or bottom. So great idea, and I think particularly good for systems traders. All right. So this is a current cycles forecast on the S&P 500, again using similar technology to what is available online to members of the foundation at the Cycles Analyzer. In fact, I could even jump over to the Foundation's Cycle Analyzer and we can compare notes. We'll want to look at the Cycles website a little later on anyway, so I might as well get it up and running here. Just a moment. For members, once you are logged in, you can go to the Cycles app. And once you're here, you can go to the Cycles scanner and you can run the Cycles Analyzer on any ticker on Yahoo Finance, for example. So that's the ticker on Yahoo Finance for the S&P 500. So 174-day cycle according to the Foundation's Analyzer, and a 173-day cycle according to a very similar approach and methodology. So so here's the 173-day cycle, 174-day cycle, right? Catching that top in early September, and forecasting a bottom sometime in the first week of January. So this cycle is a little is contrary to the seasonality right now. But I do think that the cycles are something that we need to be taking into consideration. I do think there's some risk through November and December. Overall, I personally remain very bullish through November and December, in part because of seasonality, but also because of market breadth and liquidity and sentiment, etc. So there's a lot going for the market right now. But in terms of the dominant cycle in the market, this 173, 174 trading day cycle, it is a headwind from now until January, early January. And I think that it is something that does pose a bit more risk and gives me pause about being long right now, and something to keep an eye on. One other cycle I wanted to highlight, and one of the reasons I like to use this app is because I can look at longer term cycles. This is an 847 trading day cycle, extending out with a top in early, look at that, early 2021. So March, mid-March, late March 2021. Of course, 10% either side of an 847-day cycle is, I don't know, 165 days. So that could be anytime between now and June of next year. So pretty strong cycle. The last 10 instances of this cycle, or 11 instances, 10 have been profitable. 10 winners and 1 loser. So this is still a cycle to be paying attention to. And if we look back a little further, you can really see how this cycle has caught a number of bottoms nicely. And can project it forward a little more. Still forecasting a top late March. If we combine these two cycles together, get a little more nuance. And then this is the 65-week cycle that Larry Williams was highlighting. Let's get all 3 of them there together. Just a second. It's a pretty nice forecast. You see the influence of that 173-day cycle kind of pulling things down, but the 847 and 312-day cycles pushing things up into, this extends it out to April 15th for the top. That would be consistent with Sherman McClellan's models, Larry Williams, and a few others. So I really like this model for the markets. And, I think with the liquidity and the breadth that we've been seeing from that liquidity, we're likely to see something like this. But there could be some pain if, especially if COVID gets worse or Trump wins some court cases. Who knows what could be a catalyst for a scary dip before a final rally into the spring. All right. Some questions. Let's see. What do you think about adjusting moving averages based on a cycle? And how would you split shorter moving averages based on the main cycle? I'm not sure. I've never looked into that, so I can't really offer a informed opinion. I'm not sure I even fully understand the question. Adjusting moving averages based on a cycle. Yeah, I'm not sure. Interesting idea. If you'd like to email me with some examples, I could take a look at it. Richard@cycles.org. And then which program are you using right now for cycles analysis? This is a proprietary program that I have built over the years for my own use. And again, it's very similar to what we offer online with the Cycles Analyzer, as I recently demonstrated. So a couple other things that I just wanted to take a look at here that I thought were interesting. Energy. So I have XLE here. I'll run the cycles on that. After the announcement of the vaccine, we saw a historic rally in stocks, a lot of stocks that had been beaten down, energy stocks being, one of the main sectors that has just been crushed for years now. and was had dramatic rallies over the past week. So 118-day cycle, pretty prominent in energy sectors, but let's look at a little longer. 364-day cycle, rallying, and also the 867-day cycle. So a lot of good cycles. In the energy sector, and bullish through June of next year. And you know, we had this massive rally right here over the past couple of weeks. And personally, I'm very bullish energy, and I am encouraged that the cycles are also bullish. So something to keep an eye on. The NASDAQ. Almost done. All right. Oops. Very similar cycles to the broader market. 169 days instead of 174 days. Let's look at the longer term cycle on the NASDAQ. Also peaking, look at that, mid-March 2021. So almost identical right now to the S&P 500. Haven't really seen the NASDAQ rally as strongly as some of the beaten down stocks over the past week, as investors start to expect the economy to, the non, virtual economy to actually start to come back to life. So shorter term cycles, top 11, November 24th, bottom December 17th, that's a 32-day cycle. You can find the same thing on the Cycles Analyzer. If anybody's got a couple of tickers that they want to look at, I'd be happy to look at them. Last one I just wanted to look at here is the technology sector. Of course, the NASDAQ 100 covers that pretty well too. But if we look at the spider sector on technology stocks, 32.4-day cycle, 169-day cycle, almost identical to the NASDAQ 100 itself. Let's look at this 296-day cycle. That's interesting. Caught some nice bottoms there. Nice bottom there. Bottoming March 21st. If you combine that with, say, the longer term cycle, and this cycle, and plot them all together, looks a little more concerning. Let's see, peaking around, a lower peak. You can't really, the amplitudes of cycles are not as useful as cycle bottoms in particular, and then after that cycle tops. But if we combine all those longer term cycles, a peak in April of 2021. So that is it on the market overview. And unless there's any questions, certain sectors or instruments perform better on cycle analysis. Silver? Somebody would like to take a look at silver. I don't know if certain sectors are more responsive, more cyclical than others. Good question. Something worth looking into. Let's see. We can do silver over here on the Cycles Analyzer, instead of me downloading it, if we go to the dashboard, I think here's silver. There we go. Let's see, I like to sort by Bartels. So you got a 52-day cycle in silver. And what else? There's 27-day. There's that 50, 52, 55. And this longer one here, the 213-day cycle. So let's look at that one. That's pretty interesting. And when you combine it with the 52-day cycle, get some wiggles, but still some headwinds for silver into early 2021. It's a 341-day cycle. That's a little more bullish. Topping in November. But overall, looks like that 213-day cycle is one of the most important in silver, and definitely some headwinds for silver for the next few months. So again, this is the Cycles Analyzer, available to our members. Membership is just $99 and a year, and you get access to the Cycles Analyzer as well as to the entire cycles.org website, including the Cycles library, which one of the things that we've done this past few months is to incorporate the Cycles library directly into our new website. So you don't have to go to a different URL anymore. You can access the Cycles Classic Library, Cycles Magazine, and a number of other interesting documents. So that's available to members. Of course, the Cycles app. And I wanted to make sure that everybody was aware about our new issue of Cycles Magazine. So this is the official journal of the Foundation for the Study of Cycles. And I believe it's been at least 20, closer to 25 years maybe, since the Foundation last published an issue of Cycles Magazine. So we are very excited to bring Cycles Magazine back to life, and thrilled with what a great job our new communications director, Mark McVeigh, did on it. And of course, the incredible content put together by Bill Cerubi and Andy Pancholi. And this is available even if you're not a member right now. If you just go to cycles.org, you can, the first couple of issues of Cycles Magazine are going to be free to the public. Part of us giving back and making sure everybody knows that we are committed and about delivering value to members and prospects. So enjoy whether you're a member or not. But it's just an incredibly well put together issue. Very proud of it. Also, we have reinitiated the Edward R. Dewey Annual Cycles Award. So this is mentioned in Cycles Magazine. We're accepting papers as we speak. It's a $5,000 award, and if you know anybody who you think might want to participate and submit a paper, we'd be delighted. So you can learn also about the Dewey Award. Let me just go back to the cycles.org site here. Click on the link at the bottom, and it'll tell you all about the Dewey Award. Papers are due by January 31st, 2021. So a lot of great things happening very proud of the work that the board's doing and members like Lars and others to really demonstrate the integrity and the commitment that we have to a new science of cycles. So just to summarize some of the accomplishments over the last few months, bringing the CRI and the FSC back together and bringing Ray Tomes onto our board. Let me go back to sharing with you. And also organizing the first Science Cycle Summit. So keep an eye out for that. That's going to be in early January. I can turn off my, there we go. That's coming in early January. It'll be a day-long event that'll be organized by Ray Tomes, focusing on cycles in the sciences. So very excited about that. We published the first issue of Cycles magazine. We've continued to improve the website and to be more responsive to inquiries. And we have brought the Cycles library into the newcycles.org website. We're also gradually making that content even more user-friendly, more accessible. So the foundation is continuing to move forward. We really appreciate everybody who's joined as members, and we'd love to have anyone who's considering becoming a member to join us. And also, just a reminder, we are a 501c3. We are very ambitious. We have a number of projects that we really would like to work on, including sponsoring young PhD students to support research into cycles, digitizing the cycles archives, continuing to improve the online cycles technology and developing a veritable search engine of cycles available to the public. So we hope you have appreciated the efforts and the accomplishments of the past few months and really the past year. And there's lots more to come, and we certainly could use your support, especially if you are inspired to make a donation to support our work. Again, we are a 501c3 with the IRS, again, in the United States. So donations are tax deductible. At a minimum, though, make sure you join as a member, join our YouTube channel, become a subscriber if you haven't already. Lars von Thienen is doing a regular Monday Cycles event now, and Cycles TV is going to be expanding with other presenters joining. So please do become a member and support us with donations if you're in a position to do so. And if you are interested in sponsoring a particular project, reach out to us. We'd love to hear from you and talk about how we can help your cycle dreams come true while also growing and supporting the foundation. So thank you, everybody. Take one more quick look, see if there's any additional questions. Lots of strong, prominent cycles in the markets now, like the 170 and 320 day. Which one takes precedence, or is it more important to combine them together? I think the 170-ish, 174-ish day cycle in the markets has been prominent. It does shift around a bit over time, so you do have to kind of stay on top of it. I think, you know, after the March bottoms, it was predicting a top for a while around early August, but over time that gradually shifted to the top being in later August, and that happens with cycles. They do shift gradually over time, and you can track all that via the Cycles Analyzer or tuning in to Lars's Monday presentation at Cycles TV. So, all right, well, thanks again, everybody. Appreciate your support, and great to be with you, and let us hear from you. Love to know what you appreciate about what we're doing and what else you'd like to see us do in the future. Thanks very much. Signing off. Have a great week.